everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, just keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we simulate any trades. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on your MT4 and MT5 accounts, but with the advanced functionality that you find in our web trader and app. And so if you log in here in the upper right corner, you'll be in our web trader platform. And I know we're focused on technical analysis for this session, but we should talk a little bit about the fundamentals just to get an idea of which way the wind is blowing, so to speak, with the fundamental side of things. Now, there were some numbers that came out of the US that in some regards might be cheered, and in other regards can create fear. And so we have exactly those types of movements on the charts, especially if we're looking at the equities, the major indices. We've got a rush up, a rush back down, a rush back up, kind of mixed messaging from the fundamental side of things. And what I mean by that is, on one hand, the CPI data out of the US coming in well below expectations shows that inflation is really coming down in the US. And really globally, that is cheered if inflation in the world's biggest economy is getting more and more under control. It's good for a lot of reasons. If inflation truly is down closer to target in the US, then interest rates can come down maybe sooner than expected. That makes buying houses cheaper, buying cars cheaper, starting a business with a business loan cheaper, etc. It will help hiring. It will help a lot of things if inflation really is maybe less of a worry now. I'm not saying that the US is completely out of the woods in that regard, but the data was very encouraging on the inflation side, showing that inflation has dropped more than expected with today's numbers. And the CPI data really is one of the biggest data points that traders look at on the fundamental side. Now, the flip side of that, one could argue that also shows, since things are slowing down faster than expected, perhaps that shows that the US is slipping into a recession. And so there are recession fears because of the tariffs as well. The US implemented steel and aluminum tariffs, now 25% on Canada today, and Canada shot right back with reciprocal tariffs, 25%. Now the US says because of the tariffs on other things, dairy products in particular coming from the US into Canada, that Canada puts on the US, that this was only evening things up with the aluminum and steel. And so now that Canada has raised tariffs, the fear is, well, now what will the US side do to get back one up again? And so in effect, we've got a tit for tat trade war with tariffs. And so between the US and Canada, and that's not to mention the US and the European Union, and the US and China, and the US and Mexico, etc. So a lot of fears about the tariffs. So no wonder we see on the charts, when we can just simply look at something like the NASDAQ, otherwise known as the US Tech 100, and we can quickly see that indeed there's been up and down movement today. Okay, so I can easily draw support and resistance levels. So now we're getting into the technical side of things. Okay, so here's the support level here. This is Friday's close. This is Sunday night / Monday's open. This is the drop on Monday going into Tuesday, breaking the support level with the tariff trade war fears. Here's the bounce back up towards the old support level. Once a support level is broken, typically it becomes resistance. Why? Because whatever fundamental news, in this case tariffs, caused the support level to break, if that news still exists, then that's why it becomes a resistance level, because that news caused it to break below this price, then that same news keeps the price below there unless the news changes, okay? As far as we know, there's still trade war going on between Canada and the US. So what broke this support level still exists, but there is some positive news with inflation coming down more than expected, so up goes the market between resistance now and support, back up resistance, back down, looks like it might try to go back down to the support level again. Okay, so this is what we call a ranging movement until it isn't. Okay, and what I mean by that is if this goes up and breaks through this resistance and comes up to a spot, say up here, buy stop pending orders might make sense up here, because whatever type of news that would allow the NASDAQ, the US Tech 100, to break through this resistance above the trade war resistance level, we could call it, whatever would make it break above there must be pretty big news. So if news breaks, it could happen at any moment, right? It could be a headline that comes out that, Trump talked with, the Canadian leaders and they've worked out a tariff deal. What do you think would happen? Probably the NASDAQ would break right through this resistance level and go flying up, okay? Because that's what caused it largely to break below this level. That could make it break back above. So even if you're selling on the ranging movement, if right now you're selling and putting your stop loss above this resistance because it's been holding, and it seems to want to drop back to this support level several times. So from a technical perspective and fundamental, because we've got mixed news, that's what creates ranging a lot of times. It makes sense. Sell with a market move, stop loss above the resistance. At the same time, the same spot you put your stop loss on your sell, if it breaks through the resistance, the same reason you're getting out on the sell with your stop loss is the reason why you might have a pending order here to buy. Okay, so very simple. If I say sell, take profit down at the support level down here. I drew two support levels because in the past there's support a little higher. So right around this area is where you might take profit. So if I say 19,250, if I'm shorting this, right? 19,250, stop loss on a short right now on selling would be up here above the resistance at 19,825, something like that. That would be above the resistance level that's sitting there. Okay, so I'm going after 18,000, risking 10,000. That's a nice ratio. I've got the resistance level in my favor. It has to break above this huge resistance, what we could call the tariff resistance level. It has to break above that for you to lose. And to win, it doesn't have to even go to today's low. Okay, it doesn't have to break the low of the week anyways. So what we're looking at then is 2-to-1 ratio approximately, potential profit to possible loss. But do I want to risk 9,000 or 10,000? Probably not. With a balance of 54, that would be a huge percent risk. So now I'd be looking at, okay, what trade size makes sense? How about 0.05? Now I'm risking 900 to make 1900. How about 0.03? Okay, risking about 1% of my balance, around 550, to make more than double that, or about double that. Okay, so then I say, if I like this idea of selling from below this resistance, then I sell. Okay, trade war fears maybe hold this below here, and so I could go ahead and sell on this. Maybe I want to wait and see if it's going to get closer to the resistance level before I do that, because if I go to the 5-minute candles, this was a pretty strong uptrend. It did reverse back down, but now we see a little bit of a bounce off of this little support level right here. 5-minute support, it pulled down, bounced up, pulled down, now bouncing up again. So maybe I want to try and sell from closer to this resistance up here rather than after it's bouncing off of this little support level. Okay, this is a less significant price level, this one here, but you see it was resistance back here, resistance, and breakthrough candle. And so now it broke through and became support, support, support. So on the 5-minute candle, we've got a little support level for a scalp type trade to buy off of this and sell before it hits the resistance. That's a really short-term trade. but you could be doing that as well in a shorter term move. Now that it's given us some distance back up on the 1 hour, 2 hour candles, maybe we'd like our spot then to go ahead and short this. Okay, so pretty small risk. The risk got smaller because it jumped up a little bit off the little 5-minute candle support. This is a more significant resistance level, so I respect that more than this little 5-minute candle support that we were looking at. We're calling this the tariff resistance level. And so as long as it doesn't overcome that negative momentum, it should stay below and not hit the stop loss. Now, if it does break through and hit your stop loss, okay, small risk. I'm risking less than 1% of my balance, I believe, with that trade because it moved to a better spot after it was set up. So now I could say, all right, if it does break through the resistance, then maybe I should think about buying. Okay, that means the fundamental momentum must have changed. Maybe a new headline hits that's positive. Maybe some big analysts come out and talk about, hey, it's really great news that the inflationary CPI data was lower than expected, and we feel like we're going to be able to lower interest rates sooner. If that happens, then maybe we get momentum and it breaks through the resistance. Okay, so we're trading with the ranging pattern. Makes sense from a technical perspective and with the mixed news, but you can always back that up and say, okay, if the price hits, this is the pending order, execute when price hits. If the price hits 1926, which is 1 point above my stop loss, so basically at my stop loss, I could put it at 1925, same spot as my stop loss on my sell. If the price hits 19,826, 25, whatever you want to put. You don't have to be exact here. I'll put it the same price that we had the stop loss on the sell. Okay, so if the sell closes, then for sure we should have the buy opening plus or minus the spread. Okay, so 19,825 would be a buy then from up here above the resistance. It's possible it could come up, break the resistance and go right back down. It happens, a false breakthrough, and then it comes back down. So you want to manage your risk in case that happens. All right, so we're looking at take profit. Where would we want the take profit? Well, if it breaks this resistance, the next resistance level is right about here. Okay, why do I say here's the next resistance level? Look here, this was support, it broke below, became resistance on this candle, went back above, and then was support again here, support right in this area and resistance. Once it got below, it broke below and became resistance. So this looks like an important price level. And lo and behold, it's at a round number. A lot of times, round numbers, traders like to close trades or open trades for whatever reason. So it's almost exactly at 20,000. Okay, an old support / resistance level. Okay, so if indeed it triggers the trade at 19,825, then take profit could be just below 20,000. Okay, so maybe I say 19,995, just so we take it just before it hits that round number. In case it hits 20,000, comes flying back down, right? Because that's a resistance level. So sometimes you want to take your profit just before that major resistance if you're looking to get out, in a short-term type move. Now, stop loss, if it enters at 19,826 and is a true breakthrough with momentum, if it's a big news story that breaks it through, then it shouldn't look back below this level, which is the current resistance. So somewhere below that would make sense for the stop loss. So the resistance here is showing around 19,753. So let's say 19,725 back below that resistance level with the pending order. Oops, I changed the take profit. That's not what I meant to do. 19,995. Let's get that take profit back in there. Here's the stop loss. And we wanted the stop loss below this resistance / support level. So 19,725 we said. And you see how the order window does your risk management for you. This is what I alluded to as we started the webinar. The risk management side of things is made so much easier when you have a trading calculator built into your order window. You don't have to go to somewhere else to calculate your pip value and manually figure out how much am I risking to a certain price. You know, if you trade directly on the MT4 or MT5 platform or MT4, MT5 app, it doesn't do this for you. You have to manually figure out what trade size risks how much to different prices. So this is perfect for doing your technical analysis, getting the price lines that make sense to you for entering and exiting, enter them in, and then you can see your risk reward. Now I see the ratio with my setup for the pending order, and I see I would make 8,500 and risk 5,000. Okay, it's a nice ratio. And now I just need to adjust the trade size because I don't want to risk that much, right? So I mean, you can if you want, but I'm using an example of around 1% risk per trade based on my balance size. You can risk more than that, less than that per trade, whatever you like. But at least you know how to calculate it here, okay? If your balance was what, 10,000, then 100 per trade is 1%. If your balance was 1,000, then $10 per trade is 1%. If your balance is 100, then $1 per trade is 1%. And you can go up or down from there, whatever makes sense to you. So I need to go half of this because that looked like a risk of 1,000. So 0.05. Now I'm risking 500 to make 850. So I'm risking less than 1%. 541 would be 1% of this balance, and I could make over 1%. Okay, if I'm even 50-50 on trades like this, or even if I'm even accurate 45% of the time, 40% of the time, I'm going to be an overall profit. And some of the setups are better. It's more like 2 to 1. So if I win even 33% of the time, I'm breaking even. 35% of the time I'm profiting. Depends on the ratio as you set up the trade. And you know, I don't go with a specific ratio, like it has to be 2 times the possible profit compared to the loss. I don't follow that type of rule. You can if you want, but I let the chart determine the distance to the stop loss based on the support and resistance levels. How far away does my stop loss need to be above or below that important price level? And also, where's the take profit? Okay, and if it was too close to the direction I thought it would go for take profit, too close to this resistance, and too far from the where I have to put my stop loss below, then I probably wouldn't make the trade. I mean, the direction I'm trading is based on the technicals, but also fundamental ideas that we've been talking about. So sometimes the direction is sometimes negotiable, sometimes not, depending on what's happening with the news. And so then you have to look for the entry points. Are they proper entry points then to go in the direction you prefer when you look at the technical analysis? Okay. Now today I'm setting up a sell and a buy on the US Tech 100. Why? Because the fundamental news is mixed. There's not one direction that I prefer based on the fundamental news. We've got ranging patterns, and we've also got the possibility of a breakthrough if the next headline hits, right? So I'm preparing for both. I'm trading with what's happening now with the market move, ranging pattern, sold with the ranging pattern, with the mixed fundamental news that already occurred. I'm prepared for the news to change and cause a breakthrough as well with the pending order, okay? So now I'm setting up with less than 1% risk. I could go a little bit larger if I wanted to, but that might take me over the 1%, 0.06. Yeah, that's a little more than 1% risk, 600. So I'd rather be a little under if I'm trying to be conservative with my risk management. So 0.05, I'm happy with that setup, and so I click buy. Now this one will not show up in the little suitcase over here for open positions. The one we just did was an order, a pending order, so it's in this section where the orders are listed. Okay, so this one will only open if it breaks through that resistance level, causing our market move to lose, right? The only way this one opens is if we lose on the market trade, which we sold on, and this is a backup move in case that happens. And it will buy if it hits the trigger price, 19,825, okay? In the meantime, we hope that the market move wins. It's a little in the hole right now, which doesn't surprise me. We saw the 5-minute candles were bouncing a little as we waited for it to level off on a smaller support level. So it didn't surprise me that it started off bouncing a bit, but we did let it get a little closer to the resistance level before selling. But we'll see what happens here. I'm okay with either way. If it drops and hits a take profit, great. If it goes up and triggers the buy, it's a small risk on the buy as well. And potentially it would be big news and momentum that would cause it to go up and trigger that buy pending order. So we'd have a good shot at a profit there as well. And that profit would be larger than what we lost on the sell. So if we win one of these two, we're in overall profit. Okay. If we win the first one, we're in better profit. But we'll see on this simulation. And by the way, as I do these simulations in the webinars, you can place trades on your demo account if you're nervous on live accounts, or you don't have to place trades at all. Okay, you can just learn from watching. Either way, I'm not giving advisement. It's for you to understand the concept, okay? Let me pause for a moment and see if anyone has any questions. You can type your questions in the chat box there. Okay, and I don't see any questions jumping up yet, but if I see them, I'll address them as I see them. You know, you have the option here to trade with signals, okay? So I don't know if there's a signal on natural gas. Let's see. The reason I'm interested in natural gas is because it seems like an easy fundamental prediction with inflationary data dropping like it did, and there being recession fears right now. Maybe there's reason for fundamentally for natural gas to make kind of a big move. We do see that it broke the support level, which doesn't surprise me. This was a buy signal, and when you look at the fundamentals, you understand why it didn't succeed. You know, if there are recession fears with the CPI data dropping much more than expected, that I alluded to the fact that there are recession fears with that. With recession comes less demand for energy typically. And so it doesn't surprise me that natural gas with that announcement today made this buy signal go bad. And so this is an example where if you check the fundamental news before you place a trade with a signal, you can weed out signals that you'd rather not trade on. Okay, because predominantly these signals are technical based. You see the support level was here, what they call the pivot line. It was above that support level when the buy signal came in, and they expected it to rise up towards these resistance levels up higher to take profit. What happened was that CPI data came in, shockingly low for some, not expecting it to be so much below, kicking in recession fears, and boom, it broke the support level. Okay, so as a signal right now, this is a sell signal. Why is it a sell signal? Because it's below the pivot line now. And what it tells you is if the signal is below the pivot level, then look for further downside towards these red lines, these prices, 402 and 391. Okay, so the buy scenario failed. Doesn't mean it won't go back above the pivot. If it does, then the buy signal's back on. But currently, the fundamental news caused this buy signal to go bad. And so if you're paying attention, check the economic calendar, see, ooh, lower than expected CPI data, recession fears, let me not buy on natural gas. Let me look for something else. Maybe gold would have made sense to buy on when there are recession fears, right? Safe haven. So I might skip this one. And if then I bring up gold, okay, and let's see if gold has a signal, and it was a buy signal, and that one came to fruition. It's almost at the take profit. What's the difference between this buy signal that, look how beautiful it went. The buy signal came in when it was above the pivot level, so in this area, the buy signal came in. Rather than like natural gas dropping, it went up to the take profit zone, almost to the first resistance level, where the suggestion is maybe you take profit in this area where it just reached. What's the difference between gold being a good signal and natural gas not? The fundamental news. Okay, so when you combine your technical analysis and your technical signals, with the latest fundamental news, you can pick the winners and stay away from the losers in terms of the signals, the technical signals. And so when that CPI data came in, and this was already a buy signal, then you could have said, lower than expected CPI, that means they're more likely to lower interest rates in the US now because inflation is more under control. That means US dollar would weaken potentially. It means fear of recession. So where do people go when they're leaving a weakening currency? They go to safe havens like gold. So you had lots of fundamental reasons why you'd say buy gold, not natural gas. Okay, energy has less demand with recessions, right? Typically, and gold tends to have more demand as a safe haven, just generally speaking. So while there's no guarantee, it fundamentally made more sense if you were scrolling through the signals to say, I trust this support level and this buy signal more than the natural gas, because it aligns with the most recent fundamental news from a few hours earlier. Okay, and this was an easy one with the gold signal. If you had scrolled through our signals, and you can have these come right to your app and check the signals, have alerts from the signals, etc. set up. Okay, and then you can check the latest fundamental news too. Our calendar is over here. Just go to our economic calendar and you can look at the large, they're listed on the economic calendar as high, medium, and low level of importance. The CPI was listed as high importance. Okay, so if you go to the economic calendar right here in the web trader, you don't ever have to even leave our platform or app. All of the tools are here for you to do these strategies. You could have easily seen the time that announcement was coming, saw that it came in below expectation, said, ooh, now I know that buy signal maybe makes sense with gold. And then, yeah, you'd have missed a little bit of the distance because it started moving after those numbers came in, but you wouldn't have missed all of it. You could have got in with the uptrend, with the fundamental news at your back, and rode an easy signal to the take profit up here, or just about to, and avoided the natural gas because the news went against that signal from the beginning. Okay, just using simple logic. Any questions? I do see one question. The question is, what's the right time to place a trade? There's no one answer for that question. It depends on your strategy that you're using. It depends what announcements might be happening during the day. What's the location of the technical movement? Purely technical traders would say, when's the right time to place a trade? You see this resistance level on gold where it was resistance here, and you see resistance here. They would have said as soon as it broke above this resistance, that's the time to buy. That's a breakthrough strategy. So some traders would say the time to buy is when it breaks through the next resistance level. And look how successful that would have been. Without paying attention to any fundamental news at all, you could have just had a pending order above the resistance like we did with the US Tech 100. We did a market sell and we put a pending order above the resistance in case it breaks through. Well, here's evidence that that type of breakthrough strategy can work, because here's the resistance level. I wouldn't have had to watch any announcements. I could have just had my pending order above the resistance, and when it broke through the resistance, which happened to coincide with the CPI data, boom, it would have triggered my buy, and look, I'm straight up in the money on gold. Okay, about $10 an ounce above that resistance. Or you could have gotten in earlier if you were watching the CPI data, maybe before it broke that resistance level. So different types of traders would have a different answer to that question. Some would say the right time to buy would have been when you first saw the CPI data come in the way that you thought would cause gold to go up. Others might say, no, the right time to buy is if it breaks through the resistance level and confirms an uptrend, then you should buy. So you can understand that for each trader, they would answer that question maybe a little bit different. And for me, I like to align the technical analysis with the fundamental analysis. I'd like to have both. I'm not purely technical with my trading. Some traders are, and you see right here, that would have worked, being purely technical analysis. Pending order above the resistance. If it breaks, that signals an uptrend, and your pending order would have bought, and you're a winner. Okay, great. Purely technical traders have strategies that work. I also like then to say, what caused that breakthrough? And see if I can see,
was it the CPI data? And if it was, then I'm more confident that this breakthrough is not a fake breakthrough or a false breakthrough where it breaks through and goes right back down. In this case, that didn't happen. Why didn't that happen? Because the fundamental news aligned with the breakthrough of the resistance level. Okay, so I like to try and have within my trading strategy more than one tool, not just a breakthrough strategy using the chart as a tool, but also what was the most recent economic announcement, if there was one, what's the most recent headline, etc. Okay, so there's no one right answer, but you have to think of trading as more of an art than a science, and you put together the pieces that make the sense the most for you for your strategy. I'm giving you ideas here where you could be purely technical and put a pending order to go with a breakthrough, or you could also look to back up that strategy to see what's the latest fundamental news, which is typically what I do. And the timing of that could be in the morning, it could be in the afternoon, it could be in the evening. There's no exact right or wrong time, in my opinion, to trade or not trade. It all depends on where's that news, when did it come, what's the chart look like, when does that uptrend confirm itself in the case of this breakthrough or downtrend, etc. Okay, and sometimes the trend is not a breakthrough. Sometimes, like the first chart we looked at, it's a ranging pattern that's confirming a ranging pattern by getting to the resistance and back down, to the support and back up. So it's ranging. And if you get enough confirmation of that, maybe that's enough for you with just the chart. Okay, so very good question. It sounds like a basic question, but it's actually a very good question, because then you get into the idea of different styles of trading, and there is no one right time to trade in my mind. Okay, it's when what's on your checklist within your trading strategy, when the majority of those things are met, that's probably the right time for you to trade. Okay, very good question. Okay, so gold looks to be like it has a magnet trying to pull it to 3,000. That's almost how I feel. There's no guarantee of that, but I mean, we're in all-time high territory again, I think, with gold. Almost. Gold's all-time high is, let me just pull the chart down a bit. Gold's all-time high is up here, okay? Right around 29.54, okay? Let's see if I can view this on one-day candles. Yeah, I should be able to. Let's pull it down. Okay, 29.55, 29.54. Here's the all-time high. Look where it is now. It's like a rocket ship, this one-day candle. Just solid green straight up. It looks like it wants to go to the all-time high before it decides whether to go further. Okay, so sometimes with your technical analysis, get off the small candles. It's like backing away from the mountain, and to see the larger peaks and valleys, okay? And so by going to one-day candles instead of 1 hour, all of a sudden I see, wow, this doesn't have a major resistance level until 29.54 or so, which is the all-time high. So if I'm looking at larger candles, this looks like an easy buy situation. Maybe I'm not sure it'll get there, and I'm afraid because it's climbed so much today, it could pull back. So I might decide to buy, but protect this with AvaProtect. Meaning, I know it's at a high point. It's climbed a bunch today, and it easily could pull back $20, $30, $40 an ounce before going up over the next couple of days. Okay, if it does go up. So maybe I say I want to protect this for a couple of days. I want to give this time to rise, and I don't have to worry about it pulling back temporarily and hitting my stop loss, because it's climbed so much already. I almost expect it to pull back before climbing, so I don't want to use a stop loss starting out. So this risk management side of things is based on the technical analysis on the one-day candles, and also the fact of how much it rose today, that I don't want to put a stop loss necessarily. So I'm going to lower this trade size, so the cost of the protection is the amount I'm willing to risk on the trade. So if I trade 0.45, 0.4, okay, 0.4 is about 1% of my balance cost for the protection. So my risk during this 2 days of protection, my only risk is the cost of the protection, which is below 1% of my balance. So it's exactly like my other trades, but with a unique way of doing it for the risk management. I just need to check on this day and time before the protection expires, to make sure then I add a stop loss if I want to manage risk from that point. Or maybe I already closed it in profit or closed it at a loss and collected that all back. Any loss on this trade during the protected time period gets paid back by the protection. So I could have a huge profit if this rises to the all-time high or breaks through it in the next couple days, and my risk is kept for the next couple days. And gold really can move huge amounts in a short period of time. So where would I put my take profit? Let's think big, not all-time high at 29.54, but since I'm giving it a couple days, maybe it hits 3,000. Because it seems like a nice round number it might try to go to. If I'm right once out of 3 or 4 times with this type of strategy, you see I would make 2,400. I'm risking 539. So it's like, what, 4 to 1, better than 4 to 1 ratio. So I only need to be right 1 out of 4 times to break even. Anything better than 25%, I'm profiting, okay? Stop loss, I don't want that on. I undid the stop loss because I don't want it to get stopped out with a small dip down. I have a couple days of protection. I'll check back on it and see where it is. Maybe it doesn't get to 3,000, but I check back on it in a day or two before the protection ends, and it's, you know, up around 29.55 at the all-time high, and, you know, maybe I'm in a nice profit there and I can manually close it. You don't have to let the whole protection expire if you don't want to, okay? All right, so I'm going to do a protected trade with gold because that looks like gold really maybe wants to try and hit the all-time high. And with that inflationary data coming down so much, with fears of recession and a weakening US dollar then, I have a couple fundamental reasons why I think gold could go up. And the technical then looks like an opportunistic spot as well from the technical analysis side on the one-day candles. So again, there's my strategy idea, right? Trying to align the fundamental news with an opportunistic technical analysis setup. One-day candle that broke through the resistance on the one-day candles. See resistance, resistance, resistance. So it's a nice technical breakthrough on the one-day candles. A better potential profit compared to risk with the, even if I put a stop loss, that would have been the case, but instead we used AvaProtect so we can be more patient. And so a very nice setup, technically speaking. And so it's nice to look at different levels of candles, 1 hour, 30 seconds, or I mean 30 minutes, 5 minutes, and 1 day, 1 week, etc. Okay, to get different types of trades in with your technical analysis and try and combine that maybe for better success with what is the fundamental situation as well, as you can best understand it. All right, any questions, comments before I end things for the session? Okay, I don't see anything popping up. So thank you for attending. I appreciate it. And I appreciate the good question that was there. Don't hesitate to, it doesn't have to be a question during these sessions. You can also request to look at an instrument or share an idea about something. Sometimes what you're thinking helps others that are attending for me to repeat what you might be thinking to the others. So feel free to participate a bit more in future sessions, but being quiet is okay as well. Thank you for your attendance. Good luck with your trading the rest of the week. I have another session tomorrow that's more fundamental analysis based earlier in the day at 11 a.m. UK time. You're welcome to attend. And if not, I'll be back at this session next week, same day, same time, okay? All right, bye for now. Good luck with your trading.